A Chinese startup you've probably never heard of just erased more money than the entire GDP of the United Kingdom. Not with a hack, not with a war, just by releasing a piece of software for free. Chip stocks fell into a full-blown bear market in a single week. The worst stretch for the sector since April last year. If you've got a retirement account, a pension, an index fund, anything tied to the stock market, this touched you, whether you noticed or not. If stories like this one company, one product, moving trillions overnight get your attention, stick around, because it gets weirder. Let's break down what actually happened here. So here's the sequence. In mid-July, a Beijing-based AI lab called Moonshot AI released a new version of its flagship model. It's the third generation of a product line called Kimi, and this one is enormous. Nearly 3 trillion parameters, which, in plain terms, makes it one of the largest AI models anyone has ever released to the public. And released to the public is the key phrase. Moonshot didn't lock this thing behind a paywall or an API. It put the model's weights out in the open, meaning any developer, anywhere, can download it, study it, and build on top of it for a fraction of the price of comparable American systems. Within about 24 hours, investors decided this was a 5-alarm fire. The Philadelphia Semiconductor Index, basically the scoreboard for chipmakers like Nvidia, AMD, and their suppliers, dropped into bear market territory, more than 20% below where it stood in late June. Taiwan's stock market fell over 6% in a single session. Japan closed down 4%. Even Taiwan Semiconductor, the company that actually manufactures the chips powering this entire AI boom, dropped nearly 3% on the same day it reported a 77% jump in profit. That's the part that should stop you a company posting one of its best quarters ever and the market still sold it off, because of what a rival on the other side of the world just did. But here's the twist you need before any of this makes sense. For the last 2 years, the entire AI industry has run on one core belief: American companies would stay ahead because they could outspend everyone else. More money for chips, more data centers, more electricity, that spending was supposed to be the moat, the thing that kept Chinese labs permanently a step behind. Under that story, chip demand looks basically infinite, because building smarter AI always means building bigger, more expensive AI. That belief is exactly what's been propping up trillions of dollars in chip stock valuations, and it's not the first time it's cracked. Back in January 2025, a different Chinese lab, DeepSeek, released a model that performed near the level of top American systems but was reportedly built for a small fraction of the cost. Nvidia's stock dropped sharply that week too. Investors called it a one-off. Wall Street moved on. This time, with Moonshot doing something similar, and doing it bigger, a lot of people are asking if that one-off was actually the first sign of a pattern. Now let's actually get into the mechanics, because cheaper AI model doesn't explain why chip stocks specifically got hit this hard. Step 1. The market prices AI chip companies based on projected future demand, basically, how many GPUs everyone will need to buy over the next several years to keep building bigger models. Step 2. Moonshot's model reportedly performs close to some of the best systems from Anthropic and OpenAI on tasks like coding and browsing, while costing roughly half as much to run per task. Step 3. If a lab in China can get near-frontier performance without needing the same mountain of top-tier chips, then the assumption that demand for expensive compute is essentially bottomless starts to look shaky. Step 4. When that assumption wobbles, every stock priced on infinite chip demand forever gets repriced downward fast, because that's what markets do with uncertainty. They sell first and figure out the details later. It's worth being honest about the caveats here, because the story isn't as clean as cheap Chinese AI beats America. The full model weights weren't even public yet. When the panic started, they were scheduled for release on July 27th. More than a week after the sell-off began, independent benchmark groups don't fully agree on how good the model actually is. One research group ranked it 4th overall worldwide, behind 2 American models. Early independent testing also reportedly found a notably high hallucination rate. meaning the model confidently makes things up more often than its top competitors. And running a model with that many parameters isn't actually cheap. Moonshot itself had to pause new subscriptions because demand pushed against its own hardware limits. So the picture is messier than the one-day stock chart suggests. But markets don't always wait for the full picture before they move. And this is where opinions really start to split. One camp, call them the China caught up camp, argues this confirms the trend that started with DeepSeek, that Chinese labs have found a real edge in building efficient, lower-cost AI, and that American companies' spending advantage may not be the guaranteed moat everyone assumed. In their reading, chip demand assumptions were inflated, and this correction is overdue and healthy. The other camp pushes back hard. They point out that a single day's benchmark results and a single week's stock reaction don't prove a structural shift. Chip demand could just as easily snap back once the initial panic fades, the way it partly did after the DeepSeek moment. They also raise a more serious concern. China's national security laws require domestic companies to cooperate with government intelligence requests if asked, which makes some Western firms and governments wary of building on Chinese open-weight models, regardless of price or performance. And there's a data provenance question hanging over the release too. Earlier this year, Anthropic publicly accused several Chinese labs, Moonshot included, of running large-scale campaigns to extract training data from its Claude models through fraudulent accounts. Moonshot hasn't confirmed or denied whether that data made it into this new model. So depending on who you ask, this is either the clearest evidence yet that the AI spending race is entering a new phase, or a one-week overreaction to a model nobody's fully tested. So what happens from here? There are really two paths. In one scenario, this becomes the second confirmed data point after DeepSeek in a real trend. Cheaper, open, competitive AI models keep emerging from China every few months, gradually forcing American labs to lower prices and investors to rethink just how much chip spending the industry actually needs going forward. If that plays out, it's not just a chip stock story anymore. It reshapes who controls the infrastructure behind AI and how much leverage US companies keep in setting prices globally. In the other scenario, the full Kimi K3 weights come out on July 27th. Independent labs run the real tests. The hallucination and reliability issues turn out to matter more than the benchmark headlines. And the market treats this the way it treated DeepSeek, a scare, not a shift, with chip demand largely recovering within weeks. Which path we're on should become a lot clearer by early August, once the actual model is out in the wild, and developers, not just headlines, get to judge it. Which brings us back to the bigger question underneath all of this. For years, the working assumption was that AI leadership was basically a spending contest. Whoever builds the biggest data centers wins. What a week like this suggests is that leadership might actually be up for grabs in a completely different way. Not through who spends the most, but who gets the most intelligence out of every dollar spent. If that's true, it changes who has leverage in this race entirely. So here's the question worth sitting with. If it turns out you don't need the biggest, most expensive chips to build a genuinely competitive AI model, what exactly are all those trillions of dollars in chip investment actually buying? Let me know what you think in the comments, and if this kind of story is your thing, you know what to do.